Good evening, everybody. Whoops, we're still a minute ahead of time. We'll let everybody get in. All my cuckoo clocks are going off at pretty much the same time. All right, nothing unexpected the day after a 3-day weekend. There was some profit taking or a pullback in the Dow, and notice where it came back to, right back to the 50 and the T line, which is also this downtrending of what had been acting as resistance. So that's not an uncommon pullback to that area. And it was pretty evident that it was just a pullback because during the rest of the day, the NASDAQ wasn't really trading off all that much. So it was just kind of showing that some of the biggies were being sold off, but the NASDAQ as well as the S&P kind of held up most of the day. And the things that usually affect the market, you can see crude oil backed off a little bit today, but still, even after hours, is trading right here on the T-line area. And what else do we want to look at? Gold. This is, I'm showing gold because gold is drifting back, obviously. And so why show this? Because gold was a good play for a while, but now it isn't. So what you have to realize is sometimes a chart is good, and then sometimes a chart isn't good. And this one, basically, this is a nugget, isn't real good because you can see there's really no direction, and you can see there's no consistency in the move. So this is more to say, if you can analyze a chart and say, that doesn't look good, go on to something else. It'll be back. Just don't want to be trading it. And that was one of the big things that I always kind of had to get through my head. I would be making good money in something, and then it would start drifting back. And my thought process was, I was making good money. It's going to come back again. Where finally I had to realize that a price, once it's moved, may just go dead for a while. So move on to something else because there's 10,000 entities out there, and we have the capabilities to find the best price moves and things in a matter of minutes each afternoon. So why stay in something that's not putting the probabilities in our favor? So that was gold. What I am watching, and I didn't get this one yet, but I'm watching live cattle, because if you take a trend right down through the tops here, that's where is gold moving inversely to the dollar? Not necessarily. I mean, you could pick out anything you wanted to at any point in time. Say gold is moving inverse to crude oil, or gold is moving inversely to whatever you want to pick out. It doesn't really matter what it's moving inversely to. It's just kind of showing you what's actually happening. So whatever the reason is doesn't really matter. So anyways, this was a nice reversal down here on the cattle chart. And also, how does gold move against live cattle? Well, let's see, inversely consistent. Yeah, I'm trying to think of something that doesn't make any sense, which usually most of the things I do say doesn't make any sense. So anyways, live cattle we're watching, and lean hogs. Notice where this bounced. Let's see if I've got a better trend. A little bit. You can pretty much see there's kind of a trend channel here. And then when it bounced right off the 200 with a doji, bullish confirmation away from the T-line, stochastic's coming up. The obvious is it's moving back to this area. That's right, golden calf. That was lean hogs. The dollar is moving, has been moving up. The June contract, as you can see, when it reversed down here on that bullish Harami hammer signal, first move was back up here. The second move was to break through this downtrending channel. Then you had the T-line crunch, and now you just kind of hang on to it as long as it doesn't close below the T-line. So as long as, so whether you're following something that moves inversely, obviously, to the dollar or anything else, I mean, the most obvious is the euro. But that's part of the analysis. If the market is moving inversely to the dollar, or if the market is moving inversely to crude oil. But you got to remember, something can move inversely to something else until the psychology changes. Remember, there was a time when crude oil was going down, which is usually good for the market. What was it, about 6 months ago? And the market was going down because crude oil was going down, because the implication was that if crude oil was going down, the economy wasn't as good, so everything was selling off. There's other times when crude oil is going up. That's bad for the market because people have to pay more at the pump, blah, blah, blah. So it all depends on what the psychology is. So whatever the psychology is, doesn't really matter. Play the charts, because that's telling you what's exactly happening in that trading entity. We were short coffee, but we had our buy stop right here at 122.50. Whoops. I think it was at the opens. Oh, this thing. We had our buy stops right here, because the obvious was that if we're in the oversold area, we were starting to flatten out a little bit. We shouldn't be heading in this direction. So it came up, stopped us out with a little bit of a profit. We were in at higher prices. And then it came back down. And so back in the good old days, no, not in the good old days, back in the bad old days before Candlesticks came along, I would have thought to myself, oh man, I blew it. I got out too soon. But now what do we look at? Well, we've got kind of an inverted hammer doji in the oversold area. I'd be ready to reshort this because it came back down. But now I know better, knowing that if this opens positive after an inverted hammer doji type day, that this is probably supporting down here or in this trend channel. Now I should be looking at being a buyer instead of regretting that I got out of my short position too early. Yeah, let's see, what else do we have here? Oh, somebody was asking about cocoa today. Cocoa's got a good looking chart. I'd be a little bit more careful. I'd probably want to be a buyer when it came up through the 200, just to confirm that that's not going to act as a resistance. Let me make this smaller. And just barely a channel, but you can see there is somewhat of a channel. So if it gets through the 200, Next logical target is somewhere up along that level. Okay. So we're going to kind of go back to the basics, which is why were we picking out some of the stocks that we were looking at? Well, we recommended WB because look at the nice J-hook fry pan bottom and the breakout on Friday. But if this opened positive, what was our next likely target? Coming back up into this trajectory and probably continuing higher. What usually happens in a trend like this? The trend, there's a consolidation, then they move it very quickly back up to the trend, which makes this a good trade area. And then they'll usually continue with the steady Eddie uptrend. So with that, let's see, PC. For some reason, I had this. For some reason, I had it corresponding with WB. I don't know why. But you can see all the indecisive trading right down here, right about the same level it bottomed out before. Now they're telling you which way they're planning to go. So sometimes you can look at this and say, all right, is this worth a trade? Where's my first logical target? The 50. That's 6 points on a $52 stock. That's still 14%. That makes for a reasonable trade. And maybe not so much as a stock trade, but this is where you get set up for your option trade, knowing there's your target. So the reason we stick with the patterns is because you get much higher probabilities, like we saw in our recommendation on CPX. And we had the 45 degree, then we had the fry pan bottom. I think we recommended this over here at this date. Let me make this bigger. Because we're coming out of a fry pan bottom, and notice how the enthusiasm was starting here again. And what's our basic rule of a fry pan bottom? You pretty much stay long until you see a sell signal and a close back below the T-line. So they gapped it up today. Did we know anything? Definitely not. All we knew was that the pattern was setting up to somebody do something. We were just buying what was a high probability setup. So that same scenario could go on in a stock like ZYNE. There's your fry pan bottom. Now you're right here at the 50. You're right here at the breakout level. Another one that has a good prospect of producing some big gains. SCLN. Same scenario. That fry pan bottom just broke out through this level. First target should be up here somewhere, and then expect a 45 degree off of here. Is a T-line crunch against a 20, consider much more likely to push through positive? If so, what percentage? I have no idea what percentage is, William. That's why you just use the simple, and it doesn't matter what it's crunching. It could be a previous resistance level. Yeah, I have no idea what the percentages are. Everything that we look at in candlesticks, the reason we're looking at them is because the probabilities / percentages are greatly in our favor based upon I've lost my train of thought. That's just to find how to do it. But everything we're looking at is based upon high probabilities setups. Otherwise, we wouldn't be looking at them, and they wouldn't have been brought to our attention after 400 years of the Japanese rice traders identifying them. So anytime you see a T-line crunch or a bobble, there's a nice bobble pattern. We know what happens in a bobble pattern. Comes up, fails, come back, can't close below the T-line, and comes back up through the resistance level. Tells us if it opens, this one opens positive tomorrow, and you'll probably see this one recommended tomorrow. If it opens positive, you've got a high probability bobble pattern, which turns into a J-hook pattern. Well, that's what the trader, again, if the reason I became such a proficient candlestick investor, I don't know if it's heading into receivership or not, but something's out there telling you that this is Sun Edison semiconductor. Is that different than that's not it. Sun Edison the Sunni, all right. Yeah, that's Sun Edison Inc. Now I forgot what I was saying. Oh, the reason I became very proficient at trading candlesticks was I just had such a desire to trade successfully, and I couldn't hit my butt with either hand. And the reason is that most of us, now definitely put myself in that category, do everything that is what we perceive as logical, but is the exact opposite of what investment sentiment is actually doing. So what we perceive as an investor is something being the right thing, or assuming that if we hear good news, something should go up, or if we hear bad news, something should be going down. We have so many common sense perceptions, but they're the exact opposite of what should be happening or what happens in a price movement. So realizing that when candlesticks came along, and I could see graphically where I was doing everything at the wrong time, but it made so much sense to do it at that time, but it made it very easy for me to just say, all right, if I'm doing everything wrong, and I can see where I'm buying or panic selling at the bottom, if I'm selling down here because the news is so terrible, and it turns around and goes up, what was happening? Why was I always getting in at the wrong time and getting out at the wrong time? So if I just took that and turned it around and said, all right, what was telling me I should be buying up there and everything was great, and then it started selling off, or bad news came out and I'm getting rid of the stock at the bottom and it's going up, something's reversing, or something is reversed as to what my common sense tells me I should be doing. And that's the reason we have candlestick signals, is because most investors do exactly the opposite of what the price is actually going to do. I don't know why I got started on that, but anyways. So here's SPLK. Should have more upside. Why? Because we broke through the 200. Then we did that big belt hold bullish engulfing. And what does that belt hold essentially tell us? They took out a lot of the sellers. So that means there should be more upside. That's right. That was whose definition of insanity was doing the same thing over and over and expecting a different result. Was it Einstein? All right. So there's that belt hold type signal. And usually when that belt hold type signal shows up, it tells you there's been a dramatic change and there's not very many sellers. Notice here, buyers and sellers fighting, buyers and sellers fighting. And all of a sudden they wipe out all the sellers. It tells you there's no buyer or no sellers in the way when the buyers are stepping in. If we know what to expect coming out of a pattern, there's a little scoop pattern on ETE. Flat handle. what would be the normal perspective? Oh, there's a lot of resistance right here. Don't want to be buying it. Except knowing what the candlestick signals are telling us, if there's a buy signal, a flat handle, we know the expectation is a scoop type slingshot effect to the upside. That was ETE. There's that bobble pattern on, call it smegmo, which this one has a high probability of being bought on positive trading. That usually isn't the case, Jamie. But if you see a belt hold, it's because something happened. Either there was a big seller or an announcement. That something knocked the price down and then the bull stepped right in. Leanne, a bobble is a J-hook pattern. We have an up move, a pullback, and then the J-hook wave 3. Except a bobble is more definitive. The wave 1 comes up and actually hits a resistance level. Then it pulls back and actually hits the support level, which is the T-line. And when you see that happen, anytime I see something come up and when you start seeing it resisting, I take profits, knowing that if it came back down to the T-line and started back up, that if it came back up through the first resistance level, that told me the profit taking was over, and now I'm in that bobble. So the bobble comes up, hits a resistance level, bobbles around for a while, and then starts back up. When it starts back up, essentially you've got a J-hook pattern with more definition to it that you can see where the profit taking was starting. All right, everything, I probably have too many items on here, but this is where you kind of want to get your eyes accustomed to knowing what the signals are and knowing whether you're looking at patterns or what everybody else is watching. So notice how you got kind of a wedge formation up here. But what do we know about a Morningstar signal, especially with it supporting right on the T-line? But if they open this positive, there's probably more upside. If there's more upside, it's showing us this level is not resistant anymore, so you've got to break out of that wedge. LL, there are so many possibilities, yes. And that's why we go through all the possibilities. You don't necessarily have to go after each, good chart pattern. You might decide, all right, I'm only going to buy 2 type of patterns, breakouts or buy signals that come up through the T-line. You don't have to go after each one of them. I like to show as many as possible and then make your choice of which one you're most comfortable with. Let me see if MRVL is a belt hold. Yes, that is a belt hold. That's a very good belt hold. So, do all belt holds work? Not necessarily all of them, but a good percentage of them do. Isn't a Morningstar in an oversold condition? Yes, that's the true Morningstar. But if you're seeing a Morningstar type signal, what were we just looking at? That's a Morningstar type signal, especially bouncing off a support level. We know that the good Morningstar signal should be happening somewhere down in these type of conditions. But that's still telling us something. That they've taken it down, a day of indecision, and taken it back up. A Morningstar, that's why I always say Morningstar type signal. Because that's telling you they took it down and they're bringing it right back up like a Morningstar signal. And what do we expect coming out of a Morningstar signal? If it opens positive, it's probably going to be more positive. You like INO above 1165? I don't know what's the 1165. Yeah, I would probably be buying this on positive trading, though. So back to LL. Yeah, pick out your list or look at the ones that look good. Then start analyzing which ones have the best upside potential. Some of them may have resistance levels that aren't too far away, or have the possibility of failing at a resistance level. And that's why you always see 2 or 3 stock picks. For example, today we put out 3 stock picks, and they have to confirm. Well, CXRX looked good on the open, but gave it a few minutes and it started backing off. What did we want to see if this was breaking out through this level? We wanted to see positive trading, which we didn't see. So that's why I told people, if you happen to have bought this on positive trading today, what should it have done? It should have gone positive, breaking out. What shouldn't it have done? A bearish engulfing signal at the same level that it resisted before. So if you had bought this, you close out the position. However, we were looking for things that had, once they opened, they started trading higher, like WB or Sargent, that this is what we wanted to see. We didn't want to see it open and start trading down. We want to see it open and start trading up. That told us they were breaking out of everything. So are there times where I'll get into a position like this and it starts backing off? I'll close it out, because that's why we want to know what our expectations are for each signal and pattern. We're looking for a breakout through this level on this slow curve. They shouldn't be backing it off. They definitely shouldn't be backing off below the open of the candle that told us the bulls were in control. Would you set your stop at yesterday's close? Yes. And I didn't buy this one today because I just wasn't one of the ones I got filled on or went after. But if this opened here, the last place I want to see it trade at all is below the previous day's open. So that becomes my safety stop. If I bought up here, saw it backing off, my first thought is they better not trade it back below this level, or that's too much selling pressure to show that the bulls were in control. Yeah, that I would consider a morning star signal. Even though your stochastics aren't in the oversold area, what are the other factors that's kind of indicating that was probably a reversal? Well, the fact that they did it right on the 50-day moving average. So would I be buying on positive trading tomorrow? If I really like this, yes. But then I'd be very conscious of whether it could break this downtrending channel. If I had bought CXRX today, I definitely would have been out at this level. So at what point would you have gotten that? At yesterday's open. Oh, would you have stopped yesterday's close? No, not at the close, because a lot of times they'll come back and then start back up. What was another one? I'll have to. A lot of times you have a big day like this, trying to find one. Then the next day they open it, take it down, and then they bring it right back up, or bring it back up near the end of the day. I think we had one like that. I don't know whether I remember what it was. Oh, here's an example of one where you have a bullish harami. Next day, you take it down and then bring it right back up. And next day, you could be buying. I usually wait to the end of the day, but intraday, if something comes back down through an area that it shouldn't be coming back down through, such as the previous day's open, yeah, I'll close it out intraday. But that's too much selling pressure. And if they are able to bring it all the way back down here, what's it telling me about the resistance level? It's still acting as resistance. And most of the time, JS, yes. I will be, if I'm buying based on a candlestick daily buy signal, I'm selling based on a daily sell signal. Let's see. We did. What we did. Oh. INO. Morning star signal. NBIX. Kind of a morning star signal. It was a bigger candle on the other charts. But notice the morning star type signal closing right here. This on this chart will be your best friend. So that one can be bought on positive trading tomorrow. Yeah, the other side of it, which one was that? CXR. CXRX. I don't want to see it trade below the previous day's open intraday, and I don't want to see it close below the halfway point at the end of the day. So those are kind of the two guidelines, and that's the Japanese rice trader saying if this is the candle that told you the bulls are in control, the bears shouldn't be able to close it halfway down that candle, or the bears are back in control. Hold on to your individual ones until we get done here. I don't have a whole lot tonight. Quote, anytime you see a flat trading area, then your morning star signal, that basically acts like a little mini scoop pattern. So you definitely want to be buying this one on positive trading, because any positive trading from here would tell you the morning star signal is confirming and it's breaking this little channel. No, CXRX is more of a bearish engulfing signal. Remember, a belt hold is something that you can see is significantly away from the trading area. MRVL. Oops. MRVL. Yeah, notice here was your trading range right in here. Notice what they did. They gapped it way down out of the trading range and brought it back up into the trading range. And when they brought it back up into the trading range, even if it had closed here, it'd be a belt hold signal. Or if it closed as a piercing signal or a bullish engulfing signal. But the fact they opened it that far away from the trading range tells you that there's if that becomes a belt hold. IMMR, that was more of a morning star signal on the other charts. However, this looks more like a cradle pattern. So another one that you can be buying with the expectation that your next target could be up here at the 50-day moving average. And MDSO, another kind of little morning star signal, but notice the trajectory. It's still in this fry pan bottom trajectory. So another one that can be bought, telling you that they open positive, they're confirming this little signal, and they're confirming that the fry pan bottom is still in progress. So when I say it's confirming, first of all, it's confirming the signal, which is confirming the pattern, That's exactly where you want to be. What would you say is the most powerful signal? Left right combo, belt hold, kicker. LL, there's a whole video on our website. I put the left right combo, not the left right combo, the best friend signal as number one. That's a doji followed by a gap up candle. Right behind it is a left right combo. I forget which ones I put in order, but I know the fry pan, the kicker signal obviously is up there near the top, and the fry pan bottom breakout, the J hook pattern. Yes, so the MDSO is kind of a fry pan bottom, not necessarily J hook pattern, but it had a strong reversal. Somewhat, again, like the same thing we're looking at. We had an uptrend, we had a pullback on INO. It needed to stay above the T line, which, as you can see, they couldn't really close this below the T line. Yes, there's a big belt hold in T2. So notice what the trajectory is doing. It's pretty strong. I've told you they wiped out a lot of sellers. You stay long until you see a sell signal in this one. All right, I'll look at gold. Well, you don't know if it's a bullish harami yet or not. You still need to see bullish confirmation. It is a bullish harami, but you need to see how they open this tomorrow. Okay, what else we got? Now, CLF, the kicker signal is very strong. So if you look at this whole total chart, it's in an uptrend. It was down near the bottom of the uptrend at the 200. Now they've done a kicker signal. Remember, the kicker signal is one of the strongest signals. Where do you put the stop loss, safety stop, when you trade a doji sandwich setup? Okay, GISCK. If you've got the reversal, which we could see, doji, gap up, or big bullish, close above the T line. Right now, I would stay long because you obviously have a reversal. Your stochastics are heading up. I wouldn't want to see it close back below definitely below the T line. So isn't that a good distance away? It is, but the probabilities are pretty strong. But as long as it stays above the T line right now, you're still going to be in an uptrend. And VNDA, what about a trend kicker? What you have to assume is that your uptrend is still in progress. So you could be a little bit more, what do I want to say, flexible, a little bit more loosey-goosey on your stop. You still use the T line. This one's telling us we're in an uptrend as long as we stay above the T line. PACD, no, it's not. It's a good reversal. I mean, it's a Morningstar reversal, and it is technically your best friend. So it's probably something you want to be trading to the upside. So that is kind of your best friend, but not a distinct one. Remember, we're not buying the T line. We're buying the signals. So the obvious is that if you're up here, maybe you'll get a few days of consolidation, but the kicker signal is what you want to be buying. That's on CLF. JPEP, another little fry pan bottom with the kind of little Morningstar doji and they broke out through this level, I would suspect you're heading back up into this trend channel. Yeah, PACD. And the problem with PACD, though, also was it wasn't very big volume when it was trading at $4. Now they're splitting at 10, a reverse split. The volume is probably going to get a lot smaller. Okay, MPH. This one I'd be apt to go after. After a series of dojis. Remember, series of dojis represent, if one doji represents indecision, a series of dojis represent a lot of indecision. Now they've told you what that decision is going to be, so there could be a lot of upside potential in this one. LPSN. There's kind of your, not quite a bobble, but notice what happened. It hit the resistance level. This is where I wouldn't be afraid to be taking profits. It used to be that if I took profits or got out of a trade, I wouldn't get back in because they weren't going to fool me back in and then take it right back down again. Now at least I know where to be closing out a position and where to be buying it right back. So this one has told us that when they hit the 200, pulled back a little bit, now back up. So that uptrend is still in progress. KM, it might have low volume. That could be. Here, hang on to your individual requests. When I tell Rick to do the double line, then we'll do each of the individual stocks. Notice the T-line crunch on this one. This one I'd be a buyer because it told us they took it up to the 200, sold it off, and then took it right back up through the 200, telling us the 200 is not acting as resistance. And now that it's through the resistance, probably going to see a lot more people jumping in because they're looking at it saying, oh, got through the through that level. What did we just do? A T-line crunch. Which one did we just, oh man, how can I goof up that bad? Was it Nagel? A T-line crunch is, notice how the T-line keeps pushing everything right up to the resistance level. Finally, it crunches it up through that level. So that's the T-line crunch. When you see that they can't really close it below the T-line, they keep pushing it right up through and crunching it up through. Smith & Wesson, kind of a fry pan bottom, and where did it break out? Through the 50. Right at the same level as when where the pattern started. So you can still be a buyer of this one. There's a gap up here to fill. That's probably the next target. And what else we got there? Oh, ETE. There's that scoop pattern. I wouldn't be afraid to be buying this one. Flexion. Whenever you see a big move like this is my just kind of watching to see what happens. If you have a big move like this and you're long, the next day they open it lower, I take profits immediately. Because if there's something great happening, it should be moving up. If it opens lower, it means there's going to be some profit taking. So what's my risk reward? I'm out, and then I put my buy stop right back up here. Because if it turns around and comes back up, it tells me the profit taking's over. There's still whatever that good news that broke it out is still in progress. So I'm not holding on to it down here, but notice what happened. When it came back up through there, what did it tell us about this day? that that profit-taking day was over, that whatever caused that move is now still in progress. So I got out here and got back in here. I missed out on a little bit of profitability, but my probabilities were still greatly in my favor. HRTX, another J-hook pattern. And where's this J-hook pattern occurring? Right at the breakout area. So if it opened positive, makes the 200-day moving average next likely target. HCLP, another fry pan bottom that didn't resist at the 200. Where's the next likely target? At least up here to the top of this channel. And EPE was one that we were playing a while back. It's now starting to look good again. But there's a big wedge going on right now. So this one can be bought. Just watch to see what happens once it gets, I say it can be bought because notice when it pulled back right to the 50, the 200, and now you're trading back up above the T-line. Let's see, a couple more on the long side. RLYP. This is the message. Notice they gapped this up, and there was profit taking. But the message was already there that they wanted to, somebody was trying to get into this very excessively. But they were profit taking. When's the profit taking over? There's our bullish harami. If this opens positive tomorrow, you can be buying based upon that gap up, telling you there's a new dynamic in the stock price. And Unisys, nice fry pan bottom. Where's the target? There's a gap right here, making the 200 a likely target. Now, don't have that many short positions, but there's your left-right combo on this one. Here's an example of the bigger the signal, the more compelling the trend is over with. So here's one that if you've been long based upon this chart pattern and it got way up here, what type of candle would you have? You have a huge green candle, and where are you? A big, huge distance away from the T-line. That's where you flip your 10-minute chart and see when it's time to start taking profits. Now we've got a left-right combo, closed right on the 200. Stochastic's turning back down. Makes this one very simple. If they open this lower, you can start shorting, and then just see if they break through this level, because if this is wave 1, wave 2, wave 3 should be down in this area someplace, probably back down in the support range. Yeah, CC, I wouldn't be shorting it now. If you're short, I would stay short, but definitely watch to see what's happening at the 50-day moving average now that your stochastics are getting into the oversold area. Genco Solar, big left-right combo, bearish left-right combo right here at the resistance level. Good prospect, they could take it back down here, so at least you got a 10% move to the downside. Oh, let's see, one more. Palo. There's your kicker signal right at the resistance level, right at the 50. Makes this very simple. If you're going to short this, put a sell stop just below today's low. If it comes down through there after this kicker signal, that tells you your first target is right down here at the bottom of the trend channel. But the fact that they gapped it down that much, tells you there's a lot of selling force. It could go a lot lower. If it is possible, I would like to see a presentation about how you size the amount of money in shares when you trade stock position, with a couple of examples of good trades and bad trades, just to learn and see how you adjust your positions when you trade them before and after entering. Eris, I have one very simple strategy. If I've got whatever size account, if it's a $500,000 account, $100,000 account, I break it up to where it's an equal dollar amount position. So if I had a $100,000 account, I would put on 10 positions. That doesn't necessarily mean, William, they don't often bounce up. You have to, more than likely, if they gap something down, especially off a kicker signal, it's going down lower. Nike, you can just stay short until you see a buy signal. But I put on 10 positions. Let's say I've got a $100,000 account. I put on 10 positions. Doesn't necessarily mean I'm 10 long or 10 short. I might be 8 long and 2 short. But the reason I put them in equal dollar amount is because the biggest faux we have in our investing is our own emotions. And so if you happen to see a trade that really looks good and your normal dollar amount is $10,000 in a position, say, oh, I'm going to put extra money in this one. I'm going to buy $18,000 worth. I can bet you dime to donuts that you'll spend 90% of your time watching that one, and the rest of them become secondary positions. Then what happens is if that position doesn't work the way you expect it, after you put your emotional decision that it's a great position, and your analytical abilities tell you that this is going to go much higher, when it doesn't, you start rationalizing, saying, this is going to work. I saw it setting up, it's going to work. And then instead of getting out of a position that you should be out of immediately, you hang on to it for 2, 3, 4 extra days, waiting for everybody else to see why they should be in that position. And when they don't, you've sold it out 3 days after you should have. So the reason I keep everything equal dollar amount is because one of my biggest faux pas is my own emotions. And if I keep everything equal dollar amount, no matter how great I think a position is, when I'm analyzing it each evening, it's a unit of my portfolio, not a favorite position in my portfolio. So anyways, that's one of the things that, again, our biggest faux pas is our own emotions. I, through the years, have tried to do everything possible to keep my emotions out of my trading. Okay, I guess that's about it. Are there any other general questions? Not sure I heard this correctly in the room today. You buy signals in the overbought condition, and you buy patterns in the oversold condition. Now, the other way around. You buy your signals in the oversold condition, and you're going to probably see your patterns occurring when they're in the overbought condition. Let's see which ones we had. Even taking something like this, but if this broke out of this wedge pattern, probably already up here in the overbought condition. If you're buying the signal, it's usually down here in the oversold condition. You're buying the signals, the individual signals, when you're in the oversold condition. You're buying the patterns. I'm trying to find one. You're buying the patterns like a J-hook pattern is not going to be in the oversold area. You're buying the signal. There's kind of your doji bullish confirmation in the oversold area. All right, everybody got that straight? You're buying the signal in the oversold area. You're buying the pattern, which is usually in the overbought condition. And when you see a kicker signal, it doesn't matter where your stochastics are. A kicker signal could be bought no matter where the stochastics are trading. Okay, I guess with that, Rick, go ahead and do the double line. And in 3.1 seconds, do the other double line. Oops. Ollie, you stay with. Not a good signal today, so it has to open positive and trade positive to stay in it. Now there's your little best friend, which is a doji followed by a gap up, stochastics coming up. So you did a big left-right combo, but you're heading up, so it has to open positive. If it opens lower tomorrow, you close it out. So that tells you the buying has disappeared. And XOME, another one that you want to see open positive, another little inverted hammer doji. So it needs to stay above the T line. You want to see this probably open positive tomorrow. Precision drilling. You're still in an uptrend, but you can see you're in the channel, so here's your next likely target. When I say next likely target, that's where it should move to, and then you watch to see what type of signals you get once it gets to that level. GNRT, another one you can be buying. Series of dojis, doji gap up. Just want to get out of this congestion area, but your next target could be up here at the 200. NNN, National Retail Property. So I take it that's a REIT. If it's a REIT and it's maintaining, I would anticipate it's not a bad one to buy. Don't expect a big price move, which means it's probably paying a good dividend yield. Dillard's has to open positive. If it opens lower, now you've got a bearish J-hook pattern in progress. So if this one opens lower, you can probably be getting ready to short it. ALDR, yeah, there's a T-line crunch. Notice how it kept pushing it right up to the 200. But you definitely want to see this one open positive tomorrow. Dominion, that's not a real pretty chart. You do have a left-right combo, but you can see there's really no direction in this one. I'd be trading something else. XIV, you stay long until you see a sell signal. It did kind of a hanging man signal. So if it opens lower, you can be taking profits, and you definitely don't want to be in it if it comes back down through today's low. That would be true confirmation of the hanging man. CPA, yes. As long as it didn't close above the T-line, yeah, I'd stay short. But this also, because you've got a little hammer signal and an inverted hammer signal, you definitely want to see this open lower. If it opened positive tomorrow, that's pretty much telling you they are buying at this area. I'd probably cover my short position. Amazon was still working well coming out of a fry pan bottom, slow curve. You stay long, especially if it opens positive tomorrow, breaking into new territory. PFF, preferred stock ETF. Looks like it's probably more of a dividend play with preferred stock. You can pretty much stay long on this as long as it stays above the T line. Cara, another fry pan bottom, makes it very simple. If it opens lower, it's probably going to be in a little bobble, not too far away. If it opens positive, your fry pan bottom is still working. What did I just do? Cara. Okay, we do XONE. Needs to open positive to stay in it. If it opens lower, kind of lost steam on it. And CNX, we're staying with this one. You had the left-right combo. You had to close above the T line. Now you've broken out through this level. Stay long until you see a sell signal. Goog, you can stay long on this one if you like trading it. Very obvious that if it breaks out through this level, which was right here, you're in the gap area, which means they're going to come up and fill the gap, so you're still in an uptrend. So I don't usually trade Google, but I use it definitely to see what the whole market sentiment is in general. Amazon, kind of the same scenario. Good trader as well as a indicator of what the whole market is doing. ALKS did a shooting star today. I'd probably, I don't want to see this open lower. If it does, it's coming back to test the T-line. So it'll be up to you whether you just hold it to see if it supports the T-line or come out of it, see if it hits the T-line and bounces back up and get back in it. ECA, another one right there at the breakout level. You stay long on this one. Yard has a hard time coming up on this chart for some reason. Elsie, I don't know why it does this. So I don't know what to tell you on that one right now. Let's try this real quick. That looks better. You do have a doji up here. Use today's low as your stop. If it comes back down to that level, they're profit taking back to the T line. Oops, got to figure out what I'm doing. Blue, another fry pan bottom. It's still stuck in this range, but right now you can stay long. Use the 50 and the T line as your stop, but I would stay long right now. Nothing to tell you that there's any real reversal yet. If I sell, the market makers, the specialist list buys, so he has to unload his buys and sells. I don't know what that means, Jamie. Nimble. There's that fry pan bottom. There's the 45 degree. You just stay long on this one. Broke out through this range. CLRB. This one did have the big breakout. And now you're seeing the congestion may be, or the consolidation may be over. If I was buying this one tomorrow, I'd use today's high as a stop. That would tell me they are back to buying on this big move and that the profit taking's over. And it's trying to get out through this level. So I'd rather buy into strength on this one. Omega, you stay long on this one. And notice what this one did. When it broke through the T-line, today they took it down, but came right back up by the end of the day. So that's why I give it to the end of the day to see what it's going to do. Starbucks. Nothing to get excited about here. At best, it's just not a good trader. There's usually not enough movement in it. At this point, I'd be ready to go short on any weakness if I was going to do anything. You can do that, Kenny, yes. And a lot of times, if I don't know whether it's time to get into something, but it looks good, I will buy a half a position and get ready to buy the next half position on confirmation. Carnival, get ready to short this one. Again, the kicker type signal, the gap down, and it doesn't look like it's going to support here. So I would be ready to short this one on weakness. Baba, you can buy this one. It's had a kind of a crummy chart, but you're now just breaking out of this this level. Here's the case where the kicker signal didn't confirm. Now, it's usually a very strong signal, but you want to see confirmation. So even if I shorted this on this day, I would have been back out when it did the bullish Harami the next day. That one's not coming up. NSPI. The biotechs are still in an uptrend. GI apparel, you can buy this one. Nothing real dynamic to it right now, and you still got to get through this downtrending channel. If you're long, you stay long. Just watch at the resistance levels. GPRE, another one that's kind of doing a bobble, kind of failed here at the 50. If I was going to buy this one, I'd put a buy stop just above this level. Tell me that they broke out to the upside. LPI, this one, same scenario. I'd like to see some strength. You can see the fry pan bottom setting up on this one. Tesla. Tesla, you stay long as long as it stays above the T line. So obviously you need to see some strength in this one tomorrow. DAR, just nice steady eddy. Stay with it. 2, you can get ready to buy this one. I'm pretty sure 2 has about an 8.8% dividend yield. So you can be buying this one on strength, with the obvious being that it's supporting on the T line. I'm sorry, yeah, on the T line and the 50. CWEI, another one that has to open positive tomorrow to stay in it. Otherwise, it's lost its trajectory. But I would imagine as long as crude oil stays in an uptrend, the oils will continue in an uptrend. And XPI, stay long on this little J-hook type pattern. TGP, nothing to get real excited about unless it's paying a good dividend yield. It's just not moving well enough. I'd be someplace else. Now I don't know what that symbol is. Another one that I wouldn't be long or short. There's no direction to it. That's on VET. Whiting came up pretty strong early. I'd still be a buyer of this one on positive trading tomorrow. The Russell 2000, stay long, just watch what's happening. You're in the overbought area, you got a doji. Remember, they're going to move it in the direction of how they open it after a doji. And that doji is occurring right at the same level it topped out before. So if it opens lower, probably going to be doing some profit taking. Yes, Richard, I got your email. Yep. People interested in the October training, I will get back to everybody as soon as we get some details. But, Richard, I did get your email today. Let's see, CD. Let's try CLDX. That might work better. You could be buying this one, fry pan bottom. No, because I knew everybody was ready to go Jason. So ARGS, nothing real exciting here. If you like it, you can be buying it. Just watch to see what it does once it gets to the 50. We did ETE. ETE, you could be buying this one. Monster. Nothing here to get excited about either. If you're long, you stay long, but it has to open positive and trade positive tomorrow. I probably wouldn't be a buyer or a seller of this one right now. And Apple, still consolidating sideways. This is one we were talking about in our options room today. But this one, I would probably close out the position. And because we don't know which way they're going to take it from here, whether they're going to pull back or head up. So your risk reward is gone. So if it opens lower, I'd close it out. It needs to open higher. Remember, it's going to move in the direction how they open it after the doji. And SRPT, this one has to open positive. It doesn't have a great chart, just not enough energy, especially after they gapped it up and pulled it right back. If you like it, you stay long as it doesn't close below the T line. Target, this one you can get ready to go short on weakness. You can see that it's failed at the T line. And Delphi has to open positive if you're going to stay in it, if you're in it long. If it opens lower, I'd close it out immediately because it tells you that the uptrend hasn't started. Freeport. Freeport, nothing. With it closing back below the T-line on Friday and not doing anything today, if it needs to open positive to stay in it, if it opens lower, you definitely want to be out of this one. Just no direction to it. And gold, you're in the oversold area. You did have a doji harami, but now you have to see how they open it tomorrow. JS, it was the October trading and online trading. You get a lot more detail at the private trading sessions, and it's more somebody that is having, not say having problems. It's if you've got, and I kind of describe it as having looking at the analysis of candlesticks is kind of a big jigsaw puzzle that's on the table where you've got parts of it that are put together, but it doesn't all fit together yet. Going through a 2.5 days of private training, we start from the beginning with the doji right up through all the signals, all the patterns, the quantified signals and patterns, the stop losses. We put everything in chronological order. So when you come out the other side, you know exactly what you're looking for and what type of confirmations, and it just gives you a much in-depth. The October trading is the same as the trading at the lake. I can't remember what the October was. It an online training? Yes, that's what I'm kind of describing here. Is that you're going to get a lot more detail and a lot more in-depth analysis, since there's only 4 or 5 people sitting in front of the screen. We do a lot more in-depth analysis, and in-depth analysis if somebody's having a problem, they can't pull the trigger to get in, we go through different processes to get over those faux or if you don't know when to take profits, just showing or kind of delving into each person's hang-up, which candlesticks kind of alleviate those very, very easily. Let's see. Nordstrom's, Nothing here. Wouldn't be long, wouldn't be short. Oh, and somebody was asking about what do you get for the 4,900, which is the 2.5 days. You don't have to worry about your room. You don't have to worry about your food. And then afterwards, you get access to all the information that's on the website. So if you need the videos for the 12 major signals or patterns or anything, you just email Abe and said, I was at the lake, I need this. So it's all the information is free. Plus, you get a year free afterwards. So if you're already a member, you get a year free of extended membership. Let's see, CVX for a short. Nah, I wouldn't short it just yet. Not anything that's telling. You that it's in a downtrend. Caterpillar. Caterpillar is just a tough one to trade. There's just no direction to it. If you're long right now, just watch to see what it does if it gets up to the 50. Target, I'd be ready to short next. I don't know. I mean, there's no selling yet, so you stay long. When it broke through this level, it did the bobble. So right now, all you can do is stay long until you see a sell signal. Yep, free swimming, sandwiches. We sit out on, there's a couple wineries that overlook the lake, have great food, and so we can stretch our legs during the sessions. When trading options, do you use a stock for your stop loss? Yes. Gerald, the option is only a method for buying the stock. So if you're buying the stock and you're using an option to buy that stock, you sell when the stock price, underlying stock price, tells you it's time to be out of that option position. McDonald's stays short. Yes, that is a good-looking short. Doesn't have a whole lot of price movement, but it's definitely can be shorting it. CVS stays short, but you're in the oversold area, so the logical place to put your stop is at today's open, because if they came up through there tomorrow, that means that's where the buying has started. LL, we've had people there with years of experience and people there that were brand new. And the benefit of being brand new is you don't have that many preconceived notions already built into your mental investing. So, as a matter of fact, I even tell people, if you have kids that should be learning how to invest correctly, they should start with candlestick analysis instead of the gibberish that Wall Street puts out. So, if you have absolutely no experience in investing, remember, the candlestick signals are just logical investment perceptions put into a graphic depiction. So, don't worry about the lack of experience. As a matter of fact, the lack of experience is probably more beneficial to you. Deer, another one that wouldn't be long or short. If you're long, you stay long, but you can see there's just not a good chart pattern to this one. Yeah, yeah. I don't know what D-U or .UN is. It doesn't come up here. Okay, whoops, I kept everybody overtime again. So let's call it a night. We'll see everybody bright and early in the chat room tomorrow. We'll see you then.